What's going on? Welcome back to the channel, everybody. I quickly want to do a rundown of a paper that I took this morning at the 7:58:10 macro. Shift you over to US 100 here. For the most part here today, I am bullish. Reason being, we still haven't traded into this weekly fair value gap. Above us, we're sitting sideways, drifting higher, retracing. I've just got yesterday's high, yesterday's low marked out. I'm not going to hold firmly to any bias for the most part of today. We did, however, yesterday took out Monday, the 17th of March. We took out this high. Not holding firm to any bias here. I am trading liquidity intraday until we take out one or the other side, and then I expect to see a rally to target the liquidity that's left in the marketplace. For the most part, ideally you would want to be bullish but not holding firm to anything. Took out a 4-hour-old low. Took note of this. Right there, we took out that low. We're sitting at weekly order block main threshold. So what I did, 15-minute fair value gap. If we trade above that, stay above it, bullish. Trade below it, stay below it, bearish. Okay, so I'm using that as a filter. Ran down into a 1 minute. I was looking at the structure. Okay, super messy structure, not clean at all. I was looking at this, the fact that we had this high, low, higher high, candle body. If you ignore this wick and you look at the candle bodies here, look at the high, low, see that the body of this candle is higher than the body of the rest of these candles here. So high, low, higher, high. Just want to check out something on the Dow. This came in at 808. If I look at US 30 and you look at 808, then you have a lower high. So that would be an SMT. US, I want to look at US 500 too for a sec. US 500 looks similar to US 100. You got a SMT with Dow posting a higher high. And that's a higher high posted in the form of candle bodies, not in the form of a wick sticking out above the rest of the bodies. So technically this would be a lower high. So SMT. So I was looking at this and I was looking at this breakdown here, price breaking down here. And I said, okay, if it trades back into this level, which it did, and it hung around here for quite some time, I said, okay, I'll take a paper short, see if I can target below this low and get below these lows over here. We traded into it, hung around for quite a while, and then finally broke lower and traded to this low. 8:30 news, stepping in, volatility moving in. Got the high one more time, and we basically placed a low in and retraced. Again, with this case, it's more of a difficult breaker to see up there if you were using high, low, higher, high. Yeah, and it's difficult here to say you have high, low, higher, high because candle bodies are pretty much the same. So specifying one of these candles as a breaker block just wouldn't really be the same as looking at this here. So in my opinion, price would just be hanging around inside this breaker block. Break block, fair gap here, gap sitting there, order block. Price just hung around inside that range of this breaker block here. I wouldn't take anything off this structure. The only thing you have here that's very clear in price is the fact that you have high, low, lower high. So when we look at this and we look at the down close candle, you extend that down close candle, then an entry here could be taken off of the mitigation block. You also have a fair value gap overlapping. And again, you have this order block as well as the breaker block sitting in this area. Anyway, let's not move these. Let's go over and look at the idea here. So 1 minute US 100. So there's that breaker block high, low, higher high. Traded through that. To me, this was the move, trading through that, validating this. And I wanted to see a trade back into it, which it did there. Ended up looking at this candle, posting an entry. Of course, remember that spread comes into play. It's US 100, so spread comes into play here. So I went in with 25, sold 25. That placed me at an entry down here because of the spread. And I was targeting from the low of this breaker block, which would be the high there. I was targeting 12% as usual, 12%, which is right around there. See that? See where I took my exit? My exit was right around there, I think. Let's take a look. See that? Right around there. Interesting one with this. And I want to show it in the video. Hold on. Let me get this real quick. Let me pull it up. Let's see where I placed that thing. I took a screenshot of it. Again, because of the spread, it didn't hit the limit order. Let me pull it up. Okay, let me quickly get this to show on the screen. So this is that screenshot. There's the breaker block. High, high, low, higher, high. We had a displacement below the breaker and as well as below this low, sitting over here, hung around and fell through. You can see right there, technically the limit should have been traded, but this is US 100, so spread. So anyway, I just opted to close it manually. So that's the screenshot. Wanted to include that. All right. So looking back at the chart, let's look at the details. There you go. 337.50. Again with the 50. It's always 50 cents each time. Anyway. That was the position. So we now have mitigated the loss, which this and this. We made some profits here, and it's now mitigated. If you add all this up, you'll see that we are in a $75 profit at this moment. So the loss has now been mitigated. So no reason to stress or worry about taking losses along the way. It's going to happen. It's just part of it. So we're sitting at about 1,800 paper dollars. So that's a good balance for the account. So the whole point of this is to show you that you shouldn't be having any fear when you're in drawdown. There's no reason to have a fear when you're in drawdown. No reason to rush to make it back. Go home. Go to bed with the loss. Go home on a Friday night and take the loss into the weekend. Come back on Monday. Look for price to give you good opportunities, and then you'll be able to make back what you lost, and you'll make a profit on top of that. It's just about being patient, being resilient, and knowing, again, it comes back to the video that is going to be posted, that you gotta sit through difficult days, and you gotta know when not to get in there, and when should you just be doing something else, closing the charts and focusing on different things. Boils back down to that. You don't have to trade every single day. You should not be trading every single day. You should be getting in there, have a weekly target. Once the target is met, you roll over to paper trading to hone your skills. You journal those. You journal the trades that you take. On a weekend, you reflect on what has happened during the week. You write down how you feel about what's happened. And on a Sunday, when you come sit and you prepare to analyze, you then note how you feel going into the week, how the calendar looks, and what you would be anticipating. And you plan out the week. And again, once you meet that target, you stop. You're done for the week. You then go over into paper. So you lock out your account, or you just do not sign back into your live account, or you just don't sign back into your prop. Just don't open up the prop screen. Just keep it closed. Once the goal's been met, it's been met. That's a done deal. Do something else. Hone your skill. Tape read, paper trade. And that's that. So hopefully this one has been a small, insightful series, just to make you realize that there's no need to feel any fear when a loss has been taken or when you're sitting in drawdown. Move to the sidelines, take the loss home, wait for opportunity to present itself, and then execute on the opportunity, and slowly make back the loss And once you have made back the loss, step away, journal that, write down how you feel about it, take a break, take the rest of that day off. There's no need to get back immediately into a massive profit. Just close it off for the day. Take that, be happy with the fact that you mitigated the loss, and write down how you feel about that. And come back the next day, and if a trade presents itself, then you can execute on that position. Okay, and then you follow your system. It's not about getting in there to chase a profit or getting in there and being fearful of the loss, but having a proven system that's journaled, that's shown to you over time that following X rules, you get good outcome. Okay, because everything in that system, risk management, where you enter, where you partial, how long it's going to take, all of those things are journaled. So hopefully this one has been insightful and you've learned something from this small little series, why you should not be fearing any losses. So we speak again. Be safe.